Good morning and a warm welcome to all of our clients, partners and members of the media. My name is Declan Daly. I'm the CEO of Coface Central Eastern Europe. And I guess since our last webinar, it's fair to say that we're still living through quite difficult times. At Coface, we have still nearly 90% of our 4,200 people working from home. And I think probably many of your own organizations are still experiencing the same type of challenge with COVID. We're still looking at the worst contraction since World War II, so obviously a massive shock to the economy. And if we look at 2021, I think it's fair to say that we see some positive growth on the GDP side, expected in nearly all of the Central European countries for next year. However, the revenues we did not expect to reach the same levels as 2019. We've also seen state support has been fast and effective, so many companies have very good liquidity. However, what's going to happen when these programs expire? Most of them expiring at the end of this year or at the beginning of 2021. So will companies be able to support the cost base that they have with the lower revenue levels, and what's going to happen with insolvencies? So at Coface, we've got 16 economists worldwide providing economic research and insights for our clients. And today, Grzegorz Sielewicz, our economist for Central Eastern Europe, will give you his view on how things are going to play out. And I hope you find these insights useful, also provoking. And you will be able to ask him questions at the end of the session by using the chat window. And I think many of you who have attended our webinars up until now, I think are quite familiar with how that works. So with that, I would like to hand over to Grzegorz, and yes, have a good session. Grzegorz, you may still be muted. I'm not sure if I'm the only one that can't hear you.
Yes, sorry, my fault. Thank you, Declan. I would be speaking the whole presentation being muted, so thank you for that. Good morning to all of you. Thank you that you join us this late morning. As Declan said, I'm Grzegorz Sielewicz. I'm Coface economist covering Central and Eastern Europe. And today I will have this pleasure to tell you more about our view, what's happening in the global economy and also in our region, in Central and Eastern Europe. First of all, apologies for my voice. It seems that the autumn is not my favorite part of the year, so that's confirmed by my voice. I hope you will hear me and you will understand me during the whole session today. Some housekeeping issues. So we will start with the presentation. If you attended our previous meetings, our previous webinars, we will go the same way. So we will start with the presentation. Then we will go to the Q&A session. I encourage you to ask questions. You can already ask questions during my presentation. There's a questions window on the right-hand side panel of this tool that we are using today. So if you have meanwhile any questions, please type them, and then I will read them afterwards and try to answer them. Of course, at the end of our meeting, we'll have the Q&A session. So not only questions, but if you have any views, you are also very welcome to share your views. Maybe you will not agree with all that I'm going to say. Maybe you have some different views. And last but not least, you can immediately download this presentation that I'm going to show you in next minutes. Also on the right hand side of this webinar tool panel, you have the handouts section. And here's there's uploaded the presentation. So if you would like to have it on your desk, if you would like to share it with your colleagues in your companies, please do so. Please download that. Okay, so after those few housekeeping remarks, let's go to the presentation itself. So, as Declan said, in 2020 we have really a huge recession, huge recession globally, and huge recession also in many countries. we can say that some of them suffered less, but just a little bit less. The pandemic, global pandemic, made such a huge impact that we have the biggest contraction of the economic activity since the Second World War, actually. You can see on the chart on the left-hand side that even 2009, which was, as you remember, the year of financial crisis, was not as hard, not as difficult, and it was not such a deep recession that it is this year. It is going to be this year, according to our latest forecast. The recession will reach 4.8% this year. On the other hand, we expect recovery in 2021. As you see, quite solid recovery, I would say, because 4.4%. So the level that is much more higher than it was in previous years before the impact of COVID-19. Yeah, it looks like a recovery, but when you take a look what fuels this recovery, and the answer you have on the chart on the right hand side, you can see, because this is the GDP growth weighted by particular economies, and as you can see, China is going to again deliver quite strong growth of 7% next year, and this global GDP growth average will be fueled mostly by China recovering at quite good level. On the other hand, it comes with no surprise, because when we have a deep economic contraction, it is so-called the statistical base effect. So you compare it to very low levels that were recorded in 2020. However, the conclusion is that unfortunately we will not be at the same level at the end of 2021 as we were in as we were in 2019. So those devastating effects coming from the pandemic will not be compensated fully even in 2021. And well, when you take a look at countries, the biggest countries on the world, biggest economies worldwide, so those countries that we have on the right hand side, you can see that's also valid for most of them. Yeah, I talked about China, that it will be quite fast with this recovering. For China, the pandemic is rather the issue that was there. Of course, it's still a big concern, but nevertheless, we can say that from the point of view of pandemic, it seems that China is one step ahead of for example, Europe or the US. So in terms of other countries, also countries which are important trading partners of Central and Eastern Europe, like Germany or other Western European countries, we expect this year quite deep recession. In the UK, Spain, Italy, France, a double-digit recession, and then next year, of course, recovery, but the same what I said in terms of global GDP growth applies here, so that there will not be full compensation of that what was lost in 2020. Well, in this global picture, I think it's also worth to look at kind of microeconomics at sectors, because at Coface, of course, we are very interested what's happening not only in the macroeconomy but also in particular sectors. We cooperate, we deal with businesses, and that's also the very crucial point, especially nowadays with the impact of pandemic on particular sectors. If you attended our webinar, our previous webinar, I showed you the similar chart, but right now that's the update. I mean the chart on the right hand side with our latest forecasts. Basically, what I wanted to share with you by this chart is that some sectors suffered much more from the impact of the pandemic. Of course, it's fair to say that all sectors were hurt by the pandemic, but those ones like automotive, metals, textile, clothing, retail, or energy, they suffered the most. Here, as you can see, the automotive is provided on the right-hand side with our forecasts, what we can expect in next quarters till the end of 2021. And here this blue line, light blue line, is those one that if in a case we wouldn't have the COVID scenario, we wouldn't have the pandemic. So even as you can see, there would be some decrease of turnover in this sector because we have lots of challenges in the automotive sector already before the pandemic. But the pandemic actually was a very hard hit for the sector, with, as I will show you in a minute, with new vehicle sales really collapsed in all markets, in all crucial markets, so like Europe, the US, previously China. New passenger car sales, and not only passenger, also commercial cars, they dropped significantly. And well, we expect that the Q2 was the month of the hardest hit for not only for the automotive sector, but globally also, with some recovery process. But this recovery, of course, depends on that actually what's happening right now. So probably 1 month ago, we could question if we will have the second wave of pandemic or not. Right now, I think this question does not exist anymore. In countries in our region, there are some more strict measures introduced. The Czech Republic, Slovakia, state of emergencies there. Also in Poland, wider measures, and it's going further and further. Indeed, it seems we approach the second wave of pandemic, and this what you can see with this green line on the chart on your right-hand side is this risk scenario, and risk scenario assumes the second wave of pandemic with more and more restrictive measures on the activities. So indeed, for lots of sectors again, that they are likely to suffer from that. But at this stage, we have to say that at least our expectations are those that we won't have the national lockdowns like we had in April this year, more like local restrictions and so on. But of course, there's a huge uncertainty right now regarding that, because with COVID-19 cases increasing, we cannot say that other scenarios are not possible. Coming back to sectors, I told about those that suffered the most. On the other hand, we can say that there were also actually 3 sectors that were more resilient. Nevertheless, saying more resilient does not mean that they have not perceived the contraction of the activity, and also the contraction of the contraction of their turnover. Those, especially the pharmaceutical sector, is this one that applies to that some more demand for, especially from particular pharmaceutical products were recorded. On the other hand, we have the ICT sector that also recorded high demand for some particular products like laptops and other devices. Indeed, we can also say that if more of us stay at home, if there are more strict measures, again, the sector could somehow benefit from this situation. And we have also the agri-food sector, which especially benefited when we had the national lockdown. People did some stock buying and so on, and even now we can say that agri-food sector is in somehow better position than other ones. But I think that those two, pharmaceutical and ICT, are those ones that could be said are occurred to be the most resilient during the pandemic. And then coming back more to some macroeconomics, I wanted to show you and to share with you some indicators coming from those big economies that are important players globally, starting from the US. And actually in the US, we have on one hand quite difficult situation with the COVID-19, because the number of COVID-19 cases is still very high there. It's still a huge problem. On the other hand, although this economy is quite, I would say, flexible, and it could adapt to changing situation, and that's confirmed, like for example, by the labor market. Right now, it seems that this crisis will take longer, yeah. And even when we take a look at the labor market, well, what you have a percentage change in employment on the chart on the left-hand side, it started to recover, but this recovery process compared to previous crises is much slower. On the other hand, consumers, households in the US are still quite cautious in spending their money. The personal saving rate, which is a kind of proxy of that, what's the view of consumers if they feel that the economic situation, the financial situation will be fine, then they spend more money. And we can see that after April, increase of personal saving rate, it's still on a much higher level than it was actually many years back. And of course, talking about the US, we have the political risk. We have, I will remind you, we have elections, presidential elections approaching the final stage at the beginning of November. So it's still not sure what will be the result of the election, and also it's still not sure what other measures coming from the US we can expect. And let me remind you that the part of the political risk, which is the protectionism risk, was a significant threat and concern for the global economy, not only to US and China having between the two of them a trade war, because also countries in our region, as they are included in the various global supply chains, they suffered also indirectly from that. And especially in a case, although polls at this stage do not show it, but still we have to have in our scenario that President Trump could live in the office. Again, this protectionism risk could be a concern here. And even at this stage, let me remind you that average tariff rates between the US and China are much more higher levels than they were a few years back. So indeed, this protectionism risk still exists, and we warned about it already in the past, and it's in our view still this is the issue. Of course, except of the impact of the pandemic, still we have to have on mind that that is crucial also for the global economy. Let's go closer to us. So in Western Europe, of course, we have Germany, which is, as I said, the main export destination of many countries in Central and Eastern Europe. And here in Germany, we have you've seen previously that we expect that GDP growth will contract by 6.6% this year, according to our latest forecast. But well, then it will be the recovery. But I think the chart on the left-hand side shows really good that this recovery process, that well, it won't be compensated. So the same conclusion I did when I was speaking on the global economy. However, having said that, we have some sectors that started to recover faster than others in Germany. Which is definitely a good message, at least looking at sentiment indicators. So you have on the right-hand side the IFO business climate, and here you can see that like construction, which suffered, of course, from the impact of the pandemic, but not suffered as much as at least in Germany as in other sectors. That one is recovering. Then we have retail sales also recovering, I mean, at least in terms of business climate. And I think that the most interesting conclusion here is the automotive sector, where we can see that there are more there's more optimism among companies that was previously. Right now the balance is positive. Here, of course, indeed, Germany is like it's strongly dependent on the situation on the exports market. It already perceived recovering, especially demand from China, which is a very important export destination for the German car production, which then is also a quite good message for us. I mean, for Central and Eastern Europe, which supplies parts and components to German car brands, or even produce car brands. We have lots of German car factories in our region. Nevertheless, I think that we should not be too optimistic on that. And those automotive companies started to become more optimistic, but I think it's that they could be over optimistic, and the next month are still likely to show that maybe in China there's some kind of stable demand, but in other destinations, important destinations, so like European Union, internally also in Germany, the US, the demand for the automotive production will not be as good, and then still the automotive sector remains among those ones that are hurt a lot by the pandemic, and this recovery process will take some time. And indeed, talking about the car sales, here you have new passenger car registration in the EU. So the huge disaster, the huge contraction was in April. So people, of course, were afraid of their health, were afraid of their jobs. So that was not the environment that could make them to buy cars. Then we can see that this contraction was not as deep in next months. In July, there were hopes that indeed it came back, although it didn't turn positive, but it came back to similar levels that were in January and February. But unfortunately, August data confirmed that we shouldn't be indeed that the automotive sector is not the one that confirms that it started to recover. And actually, this almost 19% of contraction is fueled by all countries. That was actually only the Cyprus with I think 600 cars of sold there that was positive growth. But in terms of other countries, we had negative growth rates in all countries, all remaining countries. So it's not that it is fueled by some big economies, whereas in other parts, like in Central and Eastern Europe, could be recovering. No. Passenger car sales in a bulk of European Union countries are still in a negative trend. They are contracting. So yeah, I think that this automotive sector is a good link finally to our region, to Central and Eastern Europe, which, well, here I wanted to share with you our latest forecast, also compared to our previous ones, because I think it's also good to check if forecasts were good or not. Although right now, we economists still we have this excuse that there's such a huge uncertainty, and it's so difficult to make forecasts that we just could be wrong. But here I think my point is quite different. So that if we have had any positive surprises coming from the economic activity in our region. And indeed, we had in terms of Baltic countries, especially Lithuania, as you can see. We previously expected that Baltic countries will suffer a lot, like they did in 2008, 2009. There were the GDP growth rates at that time were contracting a lot due to the huge economic openness and dependence on that what's happening on external markets. Right now, it seems that well, first of all, COVID-19 cases were at least, of course, in the second quarter of the year, in the first half, let's say in the first half of the year, were not so high. Also, the restrictive measures were not as harmful as in many other European countries. And then I think also the structure of the economy right now in Baltics is different than it used to be like 10 years ago. Right now, we have more, again, more digitalization, more focus on IT. On the ITC, on IT services, which right now is the factor that contribute also that the recession is not as severe as previously. Well, in terms of other countries, I think there are not like huge changes. Basically, we still expect for all countries recession this year, with the recovery next year. But well, here, of course, the same applies, like I said, about the global economy and Germany. that this compensation will not be full in 2021, and that also in our region this recovery process will take some more time. Of course, here still countries in our region that are dependent on tourism will be hurt a lot. You have Croatia here, you have Austria here, which is also quite strongly dependent on tourism, not as Croatia, but nevertheless it's also an important part of the economy. I didn't want to overload this chart with too many figures, but then we have also like small countries, Montenegro, or Albania, that also will suffer a lot from the decrease of tourism revenues. Well, here talking about our region, Central and Eastern Europe, I also wanted to show you the comparison between just the group overall of emerging countries and Western Europe. As you can see on the chart on the left-hand side, we are somewhere in the middle. So in 2020, we expect that CE countries will record deeper recession than the emerging markets group in total. But please remember what I said previously, that this group is significantly fueled by China, which we expect slightly, but anyway, positive growth this year, just 1%. But at the same time, although we are so strongly dependent on Western Europe, on demand coming from this direction, also we are included, talking about those global supply chains, we are included in various Western European supply chains. Nevertheless, we are not likely to record such a deep recession than Western Europe. Still, we have lots of competitiveness factors, advantages that also made already right now, that we've seen that last months, like August, that they delivered weak but positive export dynamics in a number of Central and Eastern European countries. Also, as I will say in a minute, we will also take a look at the household consumption. And then in 2021, well, we can see that Western European average growth rate will be higher than in Central and Eastern Europe. But here again, this is strongly the result of that. In 2020, when you have such a deep recession in Western Europe, and then due to the statistical base effect, it will be easier to show solid growth rates, but we shouldn't focus too much attention to that, because, as I said, it's the comparison to very weak levels recorded in 2020. And well, I think right now at this stage, although we named this presentation Towards Recovery, looking at 2021, we have to be aware that once we have the second wave of the pandemic, with more stringency measures coming in, more restrictive measures coming in, and that you have on the chart on the right hand side, this is the so-called the stringency index published by the Oxford University. Well, basically, the Oxford University concludes many measures, and it publishes the index which shows how much restrictive is a particular country in those introduced measures. As you can see, in March, April, and of course in May, we have various measures still valid. We have the line that is for Russia, where those measures were introduced a little bit later, and then they also last longer, because the peak of the pandemic was later than in the core of Central and Eastern Europe. Well, here, as you can see, those levels dropped. They dropped, but there's this huge uncertainty I was talking about is also that we have right now. Is also fueled by the risk of increasing that. Yeah, so the stringency index started to increase. Data are published with some delay, so we do not have like those measures that, for example, were recently introduced in the Czech Republic. But here at this stage, I think we can conclude that the stringency index will increase again. Hopefully the health situation does not make it that they will increase to the same levels that we had in April. But nevertheless, this is what was the concern, also not only for households but also for businesses. And indeed, right now the second wave of pandemic seems to be for those months, October, November, also December. So for the remaining part of the year, it's quite crucial. So the chart I showed you before with our GDP growth forecast, it's likely that after that, when we will have more and more data coming from the economy, we will again have to revise those GDP growth forecasts, and it could be like that there will be not again the improvement, but they could be again on the same level or even worse than we expect at this stage. Everything depends on that what will be the further progress with the pandemic. And then let's take a look what at particular indicators coming from Central and Eastern Europe. Here, well, I think it's important at this stage because right now we have data for March, April, May, also other months. So we can say what national lockdown, what this decrease of demand, to how much it hurt the economy in terms of particular sectors. So I think that that's a good conclusion at this stage, could be good conclusion at this stage once we are at the second wave of the pandemic. Basically, household consumption recovered quite fast in countries in our region. By the way, please don't be surprised that you have in Central and Eastern Europe Austria, but it's in our business split in Central Europe, so that's why I know that many of our attendees today of this webinar are from Austria. That's why you have it in the same chart with countries coming from Central and Eastern Europe. But coming back to the household consumption, to the retail sales, we can say that, well, it rebounded. Maybe the word rebound is not the right one, because it has not compensated this huge contraction that it was. Yeah, you have retail sales here with year-over-year changes, but nevertheless, in the number of countries where we would conclude nominal levels, still they are negative. But we can say that at least retail sales started, they recovered much faster than other parts of the economy, like, for example, industrial production, which I will show you in a minute. So we have countries that are better performers, like Austria, like Poland, Slovakia, partly Romania. But we have also Bulgaria, when retail sales are still negative. Actually, Bulgaria is the country that recorded for 4 months in a row the deepest contraction of retail sales among all European Union countries. So we can say that in general, we can say that retail sales have been recovering, but it does not apply to all countries in our region. And I think this Bulgarian case is also confirmed by the consumer confidence indicator, which still at this country, although it improved in last month, it remains on a quite pessimistic level. In terms of other countries, well, I think that the room for the improvement, for the further improvement, is quite limited. Yeah, so we had those levels that were going up and up. Of course, as you can see, remaining still negative. But it seems that for the bulk of countries, the last month we have September 2020. Is roughly the same that it was previously, or in case of some countries like Hungary, like Poland, also the Czech Republic and Slovakia. So this is even a little bit weaker than it was a month ago. Of course, talking about retail sales that they recovered, we have the positive impact for. Maybe not positive, but we have a relatively good situation on the labor market, which started to suffer. Of course, unemployment rates went up. Wage growth is not as dynamic as it was in previous years, but many measures that were introduced in countries, there were dedicated to protect employment. Yeah, so of course some companies had to decrease employment in their companies, but there were lots of measures, various measures that were introduced and that somehow saved lots of the huge part of the labor. Yeah, without those measures, we would have unemployment rates much higher than we have right now. Of course, the question is that how long those measures will be valid when they will be expiring. Well, it will be kind of phase out of those measures. It's likely that we will see unemployment rates going up. So also in 2021, we could expect that the household consumption could not be such a positive growth driver than like it was, for example, in August, when it seems that in a number of countries it indeed contributed that they started to recover. And in terms of industrial production, as I already said, data confirmed that this recovery process is somehow slower than compared to the household consumption. Well, indeed, in terms of annual growth, we have only Poland, and here you do not have the bar for Lithuania, but also the recent data show that in Lithuania we have positive annual growth. By the way, only 3 countries in August delivered positive growth of industrial production. That was Lithuania, Poland, and Portugal. But as an average in the European Union, industrial production remains on a negative level, still negative level, exceeding 6%. So, well, here, although it's for a bulk of countries, it's not again positive. We can say that nevertheless the contraction is not as deep as in previous months. But here we have to be aware that it's somehow of a catch-up process, because when we have a decrease of demand, well, it was not only the decrease of demand, because still some demand existed during April, but some companies couldn't execute those orders, couldn't meet them because some factories were closed and so on and so forth. Various reasons were here. So we can say that the latest months showed that there was some kind of catching up on these backlogs. And unfortunately, it could not fuel the performance of industrial production next month. And it already started to be seen in PMI levels, so those sentiment indicators that show performance of manufacturing. And they are considered, if they are above 50 level, that's a recovery of manufacturing. If they are below 50, it's a slowdown of manufacturing. As you can see, for most of countries in our region, we are again below 50 level. So indeed, this catching up process fueled this made that PMI accelerated, but right now it's more like it's a reality. We have only Austria that is still on the positive side. In some countries, it's still driven by optimism. You do not have Germany here, but I referred previously to the German automotive sector. It also fueled the PMI level, which increased to above 56 points, so quite high. But again, I would be quite cautious here monitoring next data. Talking about industrial production, I think it's important, or not only industrial production, but this supply side. It's also quite worth to take a look at the construction in our region, which seems to suffer less from the pandemic, or maybe at the first stage less, but that the impact is somehow delayed. And indeed, as you've seen just a minute ago, industrial production started to recover. These negative rates are not as deep as previously. The situation is somehow different in the construction output, which in some countries, of course, is not as deep as in April, but we can say that this recovery, we do not have any V recovery here. So we can say that with changing situation on the construction market, with really huge concerns on commercial construction, on that many people will again and more probably forward looking will be working from home, so not so many offices will be needed. Also that changes rental market of housing, then we can have afterwards some effects for the construction sector coming with a delay. Of course, here we will have positive issues for the construction output, like the EU funds, which our region is, the bulk of countries in our region is still, it could apply for that. We will also have the recovery, the so-called recovery, EU recovery fund, but the results or the positive impact coming from that will be seen at the earliest in late 2021. So those next months could be quite challenging also for the construction sector, suffering with a delay, and also already on the new housing market we've seen that dynamics are lower than they were previously. Moreover, the construction sector, of course, is focused on that what are companies' investments, and I believe that right now in 2021 investments of companies will be rather a weak point, that they will not be as important, or they could even negatively contribute GDP growth rates in 2021. We've already have signs of that. Here you have some data for Poland with some surveys done among companies that in all not important, but in all sections of the economy, companies expect that they will have lower investments this year versus 2019, and I think also similar situation could be in 2021, with that investments of companies will not recover. On the right-hand side, you can see also some data for Poland, but the same trends are for other countries in our region, Central and Eastern Europe. And well, here this navy line is for the current level of capacity utilization. So also companies are not going to invest because the level of their capacity utilization dropped during the pandemic, so it does not make sense to invest in new capacities, especially if they are not sure if really the demand will be recovering. But here on this chart, there's also, I think, very interesting conclusion coming from those factors that are limiting the production, limiting the business activity of companies in our region. As I said, it's for Poland, but very similar trends are for the rest of Central and Eastern European countries. Here you can see that some years back, of course, the insufficient demand was the main factor that was limiting the activity, the business activity of companies in our region, and I think it comes with no surprise, because the client is also the number one issue. If there's not the demand, then companies could not operate. But as you perfectly remember, labor shortages in our region became such an important obstacle that they became much more important than concerns over insufficient demand for companies. But the pandemic of COVID-19 reversed this trend quite fast. So again, insufficient demand is much more important than labor shortages. Indeed, as I said, unemployment rates went up, not so huge due to those measures introduced, but labor shortages are not as huge obstacle as they were previously. But here, please be aware that labor shortages will come back. Yeah. So once we will be after the crisis of COVID-19. So in 2022, looking at projections of population. We will have decreasing working age population, the share of working age population in our region. So labor shortages again will be coming back to our region. Well, they still are, of course, but they will accelerate, and still that will make companies to think about further automation, robotization, and so on. As one of final points, I wanted also to share with you some insolvency data, latest insolvency data. So far, we have, the latest ones, really the last one that were published, we have for Poland. And I wanted to share with you them because after the first half of the year, we have insolvencies and restructurations in Poland going down by 3%. After 3 quarters of this year, they are up by 8%, but it's only due to this green bar you can see. So simplified proceedings for approval of an arrangement. So the proceedings that were introduced by the COVID-19 Act in June this year. I think the situation with insolvencies quite good reflects our view on general business insolvencies in Central and Eastern Europe. So we have various measures introduced. We have in a number of countries, we have moratorium on application on insolvencies. So that stops insolvencies from increasing. By the way, in Russia, that was valid till the 6th of October, but recently that it was extended. So still moratorium on insolvencies in Russia is valid at this stage till January 2021. So also in other countries we have such a measure that, as I said, limits the increase in these difficult times, because without it we would have significant increases of insolvencies. And we have, of course, various support measures. Here again, the measures that are used by Polish companies. But my point here is that governments or other institutions, quasi-governmental institutions, introduce various measures that have helped companies. So, like for the labor market, I mean, for subsidies of employees' salaries that are mostly used among sectors, but also measures done to limit the deterioration of the liquidity of companies. So like various loans, preferential loans, subsidies, grants, or exemptions, deferrals of tax or social security contributions. We have many examples of that in countries in our region. Of course, as Declan said at the very beginning, once we have those measures expiring, then we are likely to see insolvencies going up. Of course, at this stage, we see that some measures are going to finish at the end of this year. They could be extended. Of course, on the other hand, the room for the extension and room for other stimulus measures once we have the second wave of pandemic is quite limited, because already budgets of countries were used a lot with budget deficits going up. And we see that in our region, the number of COVID-19 cases right now is much higher than it was in April, in March, April. At that time, governments reacted quite fast. Right now, it seems that they were not fast enough with them. Here, this country comparison, I think that Russia deserves a separate slide in our presentation. So basically, we can say that Russia is also somehow recovering, although GDP growth rates are still negative. Here, in terms of Russia, we have yesterday evening released data for industrial production, which is still negative, -5% after -4.2%. In a pure month, especially production, extraction, and then processing of metals. This was this subsector that made Russian industrial production still in negative territory. I think it's also the confirmation of concerns what will be with demand. Here, talking about Russia, I also think that we should be quite cautious in terms of companies' investments, and not only companies' investments, because we have these so-called national projects that were supposed to contribute quite high to positive growth in Russia before the pandemic, but right now lots of them are postponed, and we should more like take a look at household consumption as a contributor of growth. And indeed, in our view, this will be the factor that will somehow make this year recession not as deep as it was expected previously, and also leading to the gradual recovery afterwards, because various support measures, social measures were directed here. And more to that, although we have retail sales still on a negative territory, and they are likely also to be like when data for next month will be released, we have confirmation coming like from the wage growth, which again is positive, and it's a kind of factor. If we move those two lines that you have on the chart on the right hand side, it's the factor that somehow could make us think that retail sales will be improving. And I think that's also the good strategy to support this part, because in Russia, from all countries in Central Europe, in those countries that we are talking about in our region today, the Russian part of household consumption is biggest in terms of the share in the GDP, in the total economy. So indeed, slowly, but quite surely, sorry, household consumption will be this factor. Sorry. And then, as perhaps you have already looked at our latest barometer, because each quarter we release a so-called barometer publication when we show our view on the economy and also on sectors. We publish our country and sector risk assessments, and in our latest sector barometer, we focused also, a part of this publication is on the political risk, because we already many years back we introduced our political risk index, and it seems that right now the political risk is again a very important topic, not only looking like at the US with this what I said, so the protectionism risk and also the upcoming elections, but well, generally it seems that lots of people, there's a social unrest in many countries with those measures introduced due to the COVID-19, due to the health crisis and so on. And right now the political risk could be an important topic also for 2021 that could be a concern for governments and for the economy as a result. Well, here what we did, we conclude in our political risk index. I only provided you here a part of that to check how our countries in Central and Eastern Europe are ranked, are placed compared to other ones selected. So on the y-axis you have a political and social fragility index, and here, of course, we, in terms of social risk index, we use various variables that measure the degree of social frustration. So it could be like the rate of inflation. Of course, the higher level is the one that indicates the deterioration in purchasing power, that could also lead to some social unrest. Also, the unemployment rate or GDP per capita level, and also other indicators. Right, that just to catch what's the socio-economic frustration. Then also in terms of the fragility index, we use some indicators showing the nature of the political system, ethnic and probably linguistic fragmentation, also the degree of political freedom, civil rights that populations have. It's really quite important to capture this is so-called fragility index. Of course, we also take into consideration populism index. For this purpose, we use the so-called the manifesto project database, which release some index for that. So that's included in our model. On x-axis, you have the COVID-19 index that we created just recently. It includes the number of deaths linked to the COVID-19, of course, per a particular number of inhabitants, so like 100,000. Then we also conclude the number of COVID-19 infections and the stringency of measures introduced, so that what I was talking about. And well, basically, those more riskier countries in terms of political risk are those on the right top side of this chart. So Iran, Mexico, Colombia, Brazil, Argentina, South Africa, that are especially exposed to this risk. We can say that the political risk, although of course there are some concerns like regarding the rule of law, Poland, Hungary, we can hear it also that there are some concerns. By the way, it does not, I think it didn't make that investors were going out of our region. Still they like, even despite these concerns. But concluding our political risk model, we can say that Central and Eastern Europe is not the place when we have the high political risk. There are countries with much higher levels. But I think, finishing this slide, we have to be aware that our countries will move in the COVID-19 index. Yeah, this is what we have right now, with the increasing number of infections. Unfortunately, also deaths due to the COVID-19 will make us going more on the right-hand side of this chart. So indeed, but it's not only in our region. We also have other countries that are suffering from the COVID-19 recently. Okay, and as the last point, our country and sector risk assessments. You may be familiar with that. As I said, we publish that regularly in our barometer publication. So we focus on the corporate risk in particular countries, and we already did lots of downgrades of countries in the first half of this year, also including countries in our region. The latest revisions were also downgrades for, I think that the most important could be India here as the big economy, but on the other hand, India is not a significant trading partner of Central and Eastern Europe. We have other countries like, for example, Senegal or Hong Kong, which were also downgraded at this time. And sector risk assessments, we can say that in Central and Eastern Europe, the most risky with the highest risks are transports and automotive. Still automotive, although we have this competitiveness factor, still the sector is the one that is suffering, as I said previously, and the recovery process will take some time. We also have some sectors in the high risk territory, like example, construction or metals or retail, which and textile clothing, which suffered a lot from the impact of the pandemic, and only pharmaceuticals is the sector that somehow is less resilient, and that's why it's still on at the low risk level. Okay, so that's all from my side. Just concluding. So indeed, in 2021 we are going towards the recovery. But I think we have to say we have to be quite cautious about this recovery. First, if the second wave of the pandemic is not going, perhaps it is going to delay this process, and that those indicators that we have after contractions in March, April, May, they will be again not as good as they started to be in, for example, August or September. And I think 2021 also will be quite interesting year, because we will have positive growth rates. But at the same time, once those various support measures will be fading out, we could have insolvencies going up, unemployment rates going up, and despite solid growth rates, when we take a deeper look into economics, we will see that this recovery actually is quite weak economic activity, and more if we do not have any other issues, concerns, we would have to wait for 2022 to have like more decisive approach or just the recovery that will be seen and that will compensate very weak 2020. Yes, so as I said, it will take time much more than 1 year to fully recover from the impact of the pandemic. Okay, so that's all from this side. As I said previously, I encourage you to ask questions. As a reminder, on the right hand side you have this panel that we use today, and there's a questions window. You can type your questions there, and then I will do my best to answer them. So I encourage you to ask questions. Okay, so we have first questions. Could you please comment on slide 19? Transportation sector in CE countries is considered as very risky. However, figures in Lithuania transportation shows different situation. Here there are names provided. Forwarding, cargo road transport shows stable cargo volume, stable sales, and even growing margins. Profit due to the drop of fuel prices. I guess the same good situation of transportation sector is also in Poland, Romania, Slovakia, and other main cargo countries. Indeed, we can find some positive signs on the transport sector. On one hand, that it's still very competitive, and it benefits not only from domestic demand but also from external demand. Of course, please be aware that this contracted, but still is on some level. Yeah, I mean here the external one, because like even focusing only on road carriers of goods, we countries in Central Eastern Europe, we are a very significant provider of transports in Western Europe. Actually, we have countries like Poland, but also Baltics and other. They have significant share in the overall European Union transports, and then like for in terms of cabotage services, those companies benefited. I agree with you that also decreasing oil prices were beneficial, although I think that the rates of that what was paid for companies, for transport companies, it hasn't reflected this drop of prices, drop of fuel prices. Yeah, it was not fully beneficial for them. Yeah, especially that prices of some cargos has not reflected that. In some cases they were higher, but it's more like it's case by case. I think when we talk some transport companies, that they were quite concerned that indeed on one hand they benefited from lower fuel prices, but on the other hand the rates were lower for them. I mean here the money they got for transports. And here I think that in our region also we have a huge competition in the transport sector. That also makes that margins are not very high. And here, last but not least, in our payment surveys, that's for example we have for Poland. So far we have only for Poland in countries in our region, but we are doing our best also to have it on other countries. in the transport sectors, we have the longest payment terms and unfortunately the longest payment delays. For some companies, it was not possible to survive on this market. That's why also in the insolvency statistics, we have lots of companies coming from the transport sector. So with the previous contraction of demand, we decided to keep the very high risk of the transport sector assessment of the very high risk. And once we have the second wave of pandemic, which is questionable what would be with the demand afterwards domestically and on the external markets, that limited us from upgrading that. But I agree with you that if we could have some more, if the recovery is going on, the transport sector is one of these that will quite fastly perceive this recovery. So I wouldn't like to say that we will upgrade that because that depends on many other factors, but we will definitely deeply consider that. Okay. We have next questions. Which is the forecast for the next 6 months? Actually, maybe if you could precise your question. Do you mean like GDP growth forecast or on particular indicators? If you could make it clearer, because like in general economic activity, as I said, we expect that the recovery is like maybe other way. The contraction coming from the second wave of pandemic will be not as deep as it was in the second quarter of 2020. So we expect that the worst is behind us. In terms of other of the next quarters, in the last quarter of this year, we will still have negative growth rate. It's likely also to be repeated in the in the first quarter of 2021, still negative growth rates. But in the second quarter of 2021, we will have positive growth rates, I would say even quite high, because this is also the reason of that what I told you before, so the statistical base effect. The Q2 2020 was the quarter that was the deepest economic contraction, so it will be quite easy to show improvement. Okay, so thank you. We have a clarification of this question, mainly for the chemicals sector. Well, I think that our region, countries in our region are because the chemical sector is very wide one, so I think it could be quite positive for the part of plastics segment, although not as previously due to quite limited demand still from the automotive part. For the chemicals part, like this used in the agri-food production, so fertilizers and so on, we think that in our region we will be still have quite stable level, quite solid level of production. So like for fertilizers, we expect still good demand. In the chemical sectors, in our view, in our split, we also include the petrochemical sector, which here could suffer somehow from limited demand. But on the other hand, the oil prices, which due to the second wave of pandemic are not likely to go up. There are companies in our region which are active in the petrochemical segment. They could also make increased profits from refining margins. So basically, that's on the chemical sector. Okay, and let's take a look at other questions. Would you say that the CE can go out from that crisis stronger or weaker than before? Well, that's a very good question. Well, of course, I would say that first we have this huge uncertainty coming from the impact of the second wave of the pandemic. But being more forward-looking, we we think that the COVID-19 also brought some opportunity for Central and Eastern Europe. As you might remember, when we have the first wave, not first wave, but the first cases of epidemic that time, because that was mostly in Asia, in China, there were huge concerns regarding supplies of semi-final goods, of components, but also of final products from China. There were some companies, I think I can say many companies in our region, that were afraid that they won't be supplied with components coming from China, and they will not have the final products that they can sell domestically or export to Western Europe or some other destinations. And here, companies started to think, especially those included in global supply chains, started to think how to make this dependence on China, on Asia, somehow lower. And well, I think I don't believe, of course, that China will not be as it is, and it has been the #1 supplier of various goods to the world. But here, I think some bigger shares of production, of inclusion in supply chains could be get by Central and Eastern European countries. Actually, we have recently issued a publication on that. If you would like to go deeper with this subject, it's available on our website. It's free, so you can download that just directly from our website. So indeed, we also mentioned then some sectors that could benefit from that, especially if companies in our region would focus more on increasing productivity by, for example, increased automation, robotization, and so on. But also we see a good opportunity for services, for like IT services and so on. That's why what I already mentioned for Baltic countries, it's also could be beneficial, because IT services right now are very important. And last but not least, of course, we have home office schemes right now, very widely introduced, which for most of companies seems to be very effective, and they are happy with that. So also countries in our region could gather some shares from that, because if employees are able to speak particular languages, foreign languages, it does not matter where the home is, of this home office. So even like previously, it could be in France or in Germany. Then right now it could be more placed in Poland, because just labor costs, wages are lower here in the region. So in Poland, in Hungary, and just basically in Central and Eastern Europe. So that could also move some part of services. Okay, then let me look at other questions you have asked. Okay, there are many questions. Let me just take the next one. What about the salary growth to be expected in the CE region after years of growth about 10% yearly? What do you expect as trend in the new future? So I believe that as a consequence of the pandemic, of the COVID-19, this huge increase, I would say, huge increase of salaries, that especially, for example, we recorded in Hungary, in Romania, double-digit one, is right now somehow back to reality. It's not only fueled, it has not only been fueled by labor shortages, but also by increasing of minimum wages that lots of did. And here I think from this point of view, I think that the wage growth was too high for our region. I consider that to be really the risk factor, because wage growth in our region, especially in those countries with double-digit growth rates, was too high compared to the increase of productivity. I do not mean here that people here in the region should not have the same wages like in Western Europe, but it should be followed by the by the relevant increase of productivity, just to still be competitive. Because if not, we would be in the so-called middle income trap or then the production, the foreign direct investments would not be dedicated so much to Central and Eastern Europe. They could find some investors could find some other locations which are far away than Central and Eastern Europe, but nevertheless, for them that could be more beneficial. So I would expect that the COVID-19 made somehow the wage growth weaker, but at the same time I still think that the wage growth in our region will remain positive, and especially that what I said previously about the labor market. Once we have the COVID-19 after us, with again labor shortages coming back, that will still again fuel wage growth. So maybe not as high growth rates that previously, but the COVID-19 was not the factor that completely changed it. Yeah, it just weakened those growth rates. Okay. Let me take a look at others questions. Where do we have the higher risks of insolvency in C countries in the ICT sector? I believe that you mean here that to name particular countries. Well, to tell you the truth, I wouldn't like to name particular countries, because in our region we do not have data at this stage for all countries, because for some of them they are released with a delay. It would be quite difficult to say at this stage. Yeah. So previously, of course, we had some concerns on the ICT sector, especially that there were some tax issues in some countries like the Czech Republic, like Poland, related to that. Right now, it seems that governments solved that problem. But at this stage, as I said, I wouldn't like to name countries, because for many of them we still do not have the figures, and the sector splits are even harder to get at this stage, and it would not be concluded right now after the pandemic, after the COVID-19. More to that, I think even once we have it, still we should not look so deeply into insolvency data right now, because as I said, in a number of countries we have a moratorium on insolvencies. We have those support measures, so that somehow makes this analysis of insolvency statistics not relevant. It does not refer to the reality. I think once we have those measures fading out, it will be interesting to see if indeed they helped, or some companies artificially were kept in the business and they will not survive anyway afterwards. I think that the latter scale could be not the minor one, unfortunately. Okay, let's go further. Could you comment in brief your risk view on Ukraine macro and COVID figures, and if for next 12 months you expect higher risk appetite for Coface there? We see that. Firstly, I would say that of course we have quite recently this summit of Ukraine and the EU, which. Sorry to be so straightforward, but I think it didn't come like any results that could be really good conclusions. I think that the strategy remains here the same. So the European Union would like to cooperate more extensively with Ukraine, and I think it will be on a good side for Ukraine, and also for particular countries close to Ukraine, so like Poland, also Romania, other countries. with higher volumes of foreign trade. For us, of course, our country risk assessment for Ukraine has not changed. So also, I wouldn't like to. It's a confirmation of that. It's not likely that we will have the higher risk appetite. But at the same time, this crisis, the impact of COVID-19, made us actually it confirmed our strategy that we have for a long time to have like more case-by-case issues. So we evaluate company by company. We do not say that if some company is in a particular country, it does not mean that is excluded from our business activity. It's more like we just talking not only on Ukraine but overall. Right now we are also as previously we have more approach case by case in terms of our underwriting issues. Okay, let me take a look at other questions. How do you see 2021-2022 for the wine and spirit segments? Producers, trade players, both for CE and the entire EU. Well, I haven't had for quite a long time a deep dive to the alcohol segment, wine and spirits. But basically we've seen that in our region the latest trends showed that the consumption has been increasing. With especially it depends on a country, but we've seen that the wine segment was growing, whereas in spirits we have these premium segments like whiskey, cognac that was growing. The part of vodka was somehow stable, and as far as I remember, for our latest look in this sector, we expected that it will be quite stable growth over next years, with growth rates somehow around 2% the compound annual growth rate. But to tell you the truth, to fully answer your question, I would have to take a look at recent data, also to make some forecasts there. As I said, we took a look already some months ago at this segment, so it could be outdated. Yes, so that's it. Okay, I think I do not see any other questions. Here. Okay, so yeah, if you don't have any other questions, of course you can also contact me directly with grzegorz.sielewicz@coface.com. That's my email. You can also send if you have any questions to this presentation, or you have any views. Of course you can also send to the person that you usually cooperate with from Coface. Then of course it will be forwarded to me. As a final point, as a reminder, please be aware that you have this presentation in the handout section. So if you find it interesting, if you would like to have it at your desk, well then you can download it right now. Okay, so we have another question. Sorry, so I wanted to say to you goodbye, but let's take the last question. Well, and thanks for this for these good words that you also express here in the questions section. Well, but the question: do you think that the US stock market recovery is too early with respect to the COVID pandemic and US election? If there is, okay, time to answer this. Well, I think that the US stock market, let's be frank, it's overvalued. Yeah, that there are lots of companies that the P2E profit, the indicators that they do not show that it should be at this level. Of course, right now we see that the second wave of pandemic, this is what you mentioned, the US elections, it's somehow also the reason that it was not going as high as previously. But to tell you the truth, I think again it was too much optimism here, because with such a huge overvalued, we had a contraction in March. Yeah, as far as I remember, I don't remember the exact point. Was it March or April when we had the drop of the US stock market? But then it rebounded. It rebounded really quite fast. I think that lots of those funds were done as a speculative money. So I wouldn't like to give you an advice because that's not my job, and I do not feel strong with that. But I think we should be cautious with this market due to, even if we have, after the US elections, even if we have the change of the US president, even we have some measures that will be again beneficial for the US companies, we have to be aware how much overvalued it is. Yeah, it's like the Coface strategy. I think we should have here. So case by case, that there are some companies that could benefit more, that already benefited, like for example from the COVID-19, from that people communicated online. We have examples of companies that the stock prices went up really strongly thanks to that. And I think if looking at the stock market, the US stock market, again, it will be more one by one case, because as I said, the overvaluation here is quite strong here. Okay, so let's have it as the last question. Thanks a lot that you joined us today. It was a great pleasure. I hope you found it interesting. I hope also you will join our webinars in the future. So stay healthy, have a good rest of the day, and have a nice weekend. Thank you. Thanks a lot. Goodbye.